Investor Connect podcast program. This is Hall T. Martin. I'm the host of the show, in which we interview angel investors, venture capital, private equity, family offices, and many other investor groups for startups and growth companies. I hope you enjoy this episode. Thank you for joining us. Well, hello, this is Hall Martin with Investor Connect. Today we're here with Mary Ann Azevedo of Crunchbase, talking about construction tech. Mary Ann, thank you for joining us.
My pleasure.
So tell us a bit about your background before joining Crunchbase. What did you do before you started this role?
Well, I've been a business journalist for more than 20 years, specializing in technology and real estate. Specifically, over the past 15 years or so, I've written for a variety of other publications, including Forbes, Venture Capital Journal, Crain's, and the San Francisco Business Times. I started at Crunchbase News full-time last fall after freelancing for the publication for about a year and a half. I now cover startups and the venture capital behind them.
Great. So what led you to start investigating the construction tech sector? What led you into that one?
Well, as mentioned, I did cover real estate for a number of years. And in covering real estate, I learned just the challenges being faced by developers. And one of the things that kept coming up was construction costs being too high. And so digging into this further, I realized there was a growing number of startups that were focused on improving efficiencies in the sector. The construction industry has historically been very slow to adopt new technology, so it's been a very slow-moving process. In all honesty, it's been hard to convince some of the bigger players who've been doing things a certain way for so many years to change their mindset. But it's a huge sector. There's lots of potential there, and it's one that many people believe has been ripe for disruption for some time.
So for the investors out there, what's your advice for them about investing in startups in the construction tech sector? Is there anything particular you'd point out to them about this space?
I would say, from my experience, that if you can find a startup that's got a founder or co-founder that actually worked in the industry, that might be a really big advantage, because I think that the founders that I've talked to that actually have been out in the field and experienced firsthand what kind of challenges or inefficiencies there are in the sector are a little bit better equipped in addressing those problems than others. And I think that's been one of the reasons why it's been a little slower to ramp up, because there's a really massive learning curve. And I think some entrepreneurs and investors too are a little bit intimidated by the field. But I heard from one founder that there's a lot of VC interest, but I think they don't understand it enough. And a lot of VCs are just looking for the right opportunity and right entrepreneurs to back.
Great. So tell us more about the construction tech sector in general. How is the industry evolving at this stage?
Well, it's evolving in a lot of different ways. I think that, as I mentioned, construction costs have really grown in recent years. Part of it, there's a lot of different factors. One of the things is the last downturn, when construction projects halted, a lot of people who worked in the sector, contractors, subcontractors, got out of it because there wasn't enough work for them. So then when the economy improved again and construction projects started ramping up, a lot of cities like San Francisco, for example, found themselves dealing with a severe labor shortage, and that really drove construction costs. That's just one factor. There's just one of the things people complain about is that out on the field at a construction project, there's just so many moving parts and so many different systems, and they're not really, and historically haven't been communicating with each other very well. And that's led to a lot of problems on jobs that cause delays. And so companies lose time and money. So these startups that have come out are looking to tackle that by streamlining processes and making it so that different players on projects can actually communicate more easily, and that way help save time and money on really big projects.
So how much funding is going into this sector, and how many companies are at play in it?
There's a lot of money going into it. According to our data last year, and this is just in the US alone, construction technology startups raised nearly $3.1 billion. That compares with about $731 million in 2017 and $205 million in 2013. That's a huge jump. But I should note, last year's numbers are a little bit skewed by two very large deals. So that kind of makes it seem more dramatic than it was. But it's still a lot of money, and it's still a big jump.
And how many companies roughly are at play in the industry today in this space? Startup companies that are leading the way in tech development.
I think it's fairly small still. I mean, it's probably in the hundreds, but not it's not as big of a sector as others. I think it's growing, and I think part of it is, like I mentioned to you, that a lot of people, a lot of startup founders, it takes a lot to learn this industry, and not everybody's up for that challenge. And there's a lot of regulations involved. It's a little complicated, and it's not for everybody.
Sure. So, what are some of the trends in the sector? Those who are in the middle of it, what are they facing there?
Well, I've seen a lot of construction project management software companies. One larger one that's actually reached unicorn status. I think it probably reached unicorn status a couple of years ago, but it tripled its valuation last year to like $3 billion. And that's Procore Technologies. So they're a rather large player in the space. And then there are others in that same exact space that are smaller, but working to compete and grow. One is San Francisco-based Rumbix, and that was started by some veterans from the Navy, I believe, and that worked on a number of projects and realized there was a lot of potential to improve how these systems worked and communicated together. You're also seeing, I think, some more companies doing like prefabricated construction. There's the large funding recipient in the space is Katerra. It raised nearly $1 billion last year from SoftBank and some other investors. And so that's one of the things they're focused on is creating prefabricated structures at a large scale. And then I covered another company out of North Carolina, Prescient, and they're doing a similar thing. And they're building prefabricated like multifamily units and projects. So I think those are two of the biggest trends that I've seen.
Great. So they're either building prefabricated units or they're putting together project management software to put it all together. I've also seen some in the space that were handling the payments challenge that goes in the construction place as far as helping pay the contractors in a timely manner and then keeping track of all the books and so forth. Do you see any other fintech plays around this space?
I think there's just so much opportunity really around the space. It's just so big and there's so many components to it and there's so many moving parts. So, I mean, it could go from things related to HR, things with project management, just dealing with subcontractors. There's so much potential and so many facets. And there's something else before I forget really quickly too. I would say that another reason why this space I think is really interesting is that a lot of larger companies have realized that it's growing and it's really important. And then rather than them try to reinvent the wheel within or internally, they're looking to acquire companies, startups that are doing it faster than they could. So I think that is a growing trend. And as an example, in the fourth quarter of last year, AutoGrid acquired Plandesk for $875 million. So I think you're going to see more M&A in the sector too, as larger companies try to keep up. And they're going to be doing that by acquiring these startups.
Well, in Austin, we had a company called Icon that actually came up with a machine that would actually 3D print a house. And they were focused more on the tiny house segment or the smaller house segment. But it was interesting how in less than 12 hours, they could actually print a house. After it sets for 24 hours, they come back and they would lay a roof on it and they would be done. And that was pretty interesting concept is to do 3D printing at the house level. What do you see going on there?
Yeah, I actually did interview that company and did a story on them. And I thought it was fascinating what they did and what they're doing. So yeah, it's really, really interesting. I don't know. I think the potential for that, what they're doing is huge as well. We'll see. We'll see how that plays out over time. I mean, they are, like you mentioned, focused on the tiny house sector, and I think they're working to do bigger projects too. So we'll just have to see how that plays out. But I thought that was really fascinating too.
So what are the challenges in this space when someone does a prefab? What are the issues that they face to make that thing work? And what are the challenges that entrepreneurs have to overcome to make these construction tech startups reach success?
There's different things. In terms of the prefab sector, I know that sometimes just construction delays happen and then you're just dealing with external factors that are not always things you can control. That's one thing in terms of the prefab space. And then, as I mentioned before, the massive learning curve, I think, is something. And then there's just a lot of different cities have different codes and rules and policies and laws. So you have to really deal with all of that too, and learning them and understanding them and addressing those. I think something else to keep in mind is right now, there's been a lot of construction over the past few years, especially in the major cities like San Francisco, for example. In a down economy, that could lead to fewer projects. So that doesn't mean, though, in my opinion, that there's going to be less of a need for what these startups are doing. In fact, it could mean that there's more of it. And for example, I talked to one entrepreneur who was saying that what they're trying to do, a lot of these startups, is create a more affordable way to manage all of these various processes and address all these inefficiencies. So if there is a downturn, then these startups can offer services or software solutions that can help them do the same things they've been doing, but at a lower cost and in a more time efficient way. So even if there is a downturn, I think there's still a lot of opportunity there for startups in this space.
Well, to a certain extent, it reminds me of the oil and gas industry, which is well behind the curve on implementing technology. And so even the least little bit of technology application can pay back in a big way because there's so much inefficiency there to be managed or processed. Is that the same here in the construction tech space?
Yeah, I think that's a great analogy, Hall, and I agree. I think it's really similar. Both of those are industries that have been around for a very, very long time. They've gotten used to doing things a certain way. Not everybody who leads large construction companies or oil and gas companies want to adopt these new technologies. So that's another challenge that these startups face is, just spreading awareness and getting some people who are very used to their old way of doing things to open their eyes and their minds to new ways.
Well, great. Well, in the last few minutes that we have here, what else should we cover about construction tech?
I just think that we're going to see more investing in the sector, more startups popping up in the sector. I think there's a lot of VC interest. I know there's a growing number of firms out there who are focused almost exclusively on it, which I find very interesting. There's one called Brick and Mortar Ventures that backs startups developing software and hardware solutions for real estate, hospitality, and construction industries. There's other firms that they're not necessarily focused on construction tech, but like Greylock Partners, for example, one of their partners told me it's something that they're looking to do more investing in, having invested in at least one company in this space. So I think that we're going to see more deals. We're going to see more companies. It's just happening at a little bit slower pace, maybe, than other sectors.
Well, great. Well, how best for listeners to get back in touch with you?
Well, they can read our articles at news.crunchbase.com, and it's best to reach me via email at Mary Ann, no E, one word, at crunchbase.com.
Great. We'll put those in the show notes and let people get back in touch with you that way. Also, look forward to having you back in the near future as well, as want to learn more about the different industry segments that you're studying.
Great. Thank you so much, Hall. Good talking with you.
Thank you so much. Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Paul T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.